go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng is managing to hold on to gains.
A further reduction in the policy rate at the December meeting is not a foregone conclusion.
They're 44 points lower on the GIFT Nifty.
I think we've already agreed to a lot of things.
You got the Nifty, which is at about 26,028, 26,020.
I would expect the government to, probably seek additional clarification from the Supreme Court.
It's 10% instead of 20%, effective immediately.
Benchmark indices are down close to about 0.5%. The Nifty is holding on, clinging on to 25,900.
The non-compliance notice seeks additional information and clarifications in specific aspects of the submission.
We are building like India's largest wealth platform.
The EBITDA has come in at around 1,894 odd crores.
Hitachi, Continental, D Diamond, and J Ocean, which is a JP Minda Group company, all of them have received licenses from the Chinese government to import rare earth magnets from China.
Well, a choppy trading session. Nifty, as we speak, at the 25,900 level.
Well, that is the day so far. Markets down 150 odd points. If you're looking for reasons, I'd say you'll struggle because there's not any discernible top of the mind big drivers for why markets should be down, except maybe the fact that there is a little bit of profit booking across the board. No sectoral big news one way or the other. Yesterday there was capital markets. Today there isn't very much which is going on. But there are lots of individual movers because it's the thick of earnings season. And I guess that's what we're going to focus on here over the next 60 minutes, running into market close. I'm Prashant, with me, my colleagues Surabhi and Reema. Guys, hi.
Hi. A lot of individual stocks, right? Yeah. Even though at the headline index we're down a tad bit. Look at Cipla, leadership change. Exide, they've postponed or deferred the earnings announcement. Just right now, sometime back, Aditya Birla Capital came out with a decent set of numbers. So lots to look.
Yeah. Going back to what Prashant was saying, that there are no real reasons. It's just like as if the mojo is missing, right? You're seeing the China-US dance play out. You've seen the Fed rate cut play out. But the Indian market, maza nahi aa raha hai. So that maza either has to come from earnings or it has to come from, something concrete on the trade front. And in the absence of those two triggers, we're just sort of ambling along. And it remains very stock specific, as you guys are saying, till we get a more decisive move on these two triggers.
Maybe all the maza is happening in the IPO market, right? There's so much action with large issues tomorrow. Lenskart opens. Next week, you've got Grow, and these are large size issues looking to rake in.
Also maybe one reason, right? But the market's become so big now, right? Even if you remember that Hyundai, what was the last big one?
LG Electronics was the big one.
If you remember, in the 2 or 3 days when people had applied and the IPO was open, and
4 lakh crores.
4 lakh crores was out of the market, right?
Yeah.
I mean,
and we did well that week.
And in that period, the market was higher. So
because you remember, we were almost at the verge, or that's what the market believed, and everybody believed, we were on the verge of a breakthrough. Because Diwali greetings were happening, phones were ringing across New Delhi and Washington.
Parties in White House also.
Exactly, and then we figured, we have to wait.
Absolutely, and I think, as I said, I mean, it's not. You can't really pinpoint this or that. But now for 4 or 5 days now, the market's not done very much. If you just look at the aggregate sum total of the last 4 or 5 days. Before that, prior to these 4 or 5 days, I mean, we had this 1,000-point move from 24,600 to about 25. Actually, we're still at about 25,900, so over a 1,000-point move before that. Well, lots to discuss, and let me just quickly run you through what's coming up here on closing bells. The market's under a bit of pressure. Nifty is hovering around 25,900. All sectoral indices are in the red. DRL is down, Shelly is down, semaglutide delay is essentially what is hurting. We've got a comprehensive analysis of that coming up. Vodafone Idea, of course, is down. There is Indus Tower, which is also lower after, of course, the court threw another googly in what was looking like perhaps it's a clear road for the government to make its case once again and provide larger relief. Now that's in doubt. It's not very clear. So stocks are taking a bit of a knock. PB Fintech and BHEL, both result reactions, big movers on both. And I think we need to spend some time on BHEL specifically because it's like it's been written off, but looks like it's doing very well. And of course, shares of Sagility will play out some management sound bites. We had them in the morning. They've raised their guidance, not by much, by about 1% compared to what they had earlier. And of course, some previews as well. So ITC will report. And I think Dabur number should be with us as well. So we'll analyze those as well. Well, how should you position yourself in the last hour? Mitesh is with us with exactly that. Mitesh, good afternoon. Good to have you back. What would you do?
Well, as I said, I think, we need to get past 26, 150, 200 zones. We have not done that. Twice we have gone there. And twice we've come up. So that is the area of all-time highs. There's a falling gap there as well. So it will be a tricky level to get past. And till that happens, there's always a chance that, the market could give up some gains because the rally started from 24,600. So nearly about 1,500 plus kind of point kind of rally which has happened. And therefore, we should, assume that there is some kind of a sideways activity consolidation which could happen before the markets garner enough strength to get past these levels. So for the time being, my view is 26,150 on the upside to about 25,800, and in a bad case scenario, 25,600 could happen, and that's where the market will be positioned. Therefore, trading should be more stock specific. Now, I have one buy and one sell call. On the buying side is JSW Steel. Recommend buying with a stop at 1189 for targets of 1240, and Bajaj Auto is a slightly negative pattern over there, so sell with a stop at 8980 for targets of 8800.
Yeah. Okay. All right. Mitesh, got that. Thank you very much for the details. By the way, we had some really good result reactions today. I'd have to say that Sagility is up about 8%. PB Fintech is getting a big thumbs up from the market. It's up about 7%. BHEL, both BHEL and L&T, the markets like what they've heard from these two, private public sector behemoths, and both of those stocks are rising higher as well. Let's bring in Deven Choksi into the conversation. Ask him, which of these he's got his eye on, and we'll play out some of the management commentary from these companies as well. Deven, good afternoon. Good to have you in. I don't know if you track Sagility. Tell us, if you have any thoughts. PB Fintech. And of course, the capital good biggies then, L&T, BHEL. Any one or two stocks where sort of a definitive view comes to mind, looking at numbers?
Yes, good afternoon, Selvi. I think both L&T as well as BHEL, I think the numbers are backed on a very strong order book that they always carried and executed thereafter. Of course, BHEL, the growth numbers are looking very, very handsome. Also because of the fact that I think last year, probably I think the base was slightly lower compared to what they have executed in the current quarter. So that could be, I think, one of the reasons. Now, whether one would see this kind of a sustained growth on a quarter-over-quarter basis, I think that's a question mark, or maybe I think explanation that management can provide in the earnings call. As regards the visibility of the execution is concerned, if you forget the quarter-over-quarter basis kind of a number, I believe that L&T looks, I think, pretty set for, I think, a larger growth. In quarter-over-quarter basis, I think they've been recording higher amount of order inflows, which is giving them now the visibility beyond 3 years of execution. As far as the growth is concerned, I think it would be maybe, I think, in double digits, not, I think, mid-double digits, but I think somewhere between 10% to 15% kind of a growth they will continue to operate with in, I think, 3 years' time. So we like, I think, L&T proposition far better given the visibility that it is offering. BHEL, of course, would like to see how they can sustain this kind of growth rate which they have produced in this quarter.
Okay. So L&T definitely is something that you're picking out. By the way, since we were just talking about Sagility, let's bring the stock back up. The numbers have been really good. The company has done well on the top line. They've managed to get their EBITDA margin back to that 25% level as well. And they're fairly confident that the second half will be good. Not just that, the management has also told us that this entire issue about uncertainty in the US, whether it's healthcare and the changes that are coming up, whether it's the visa changes, it is not impacting them in any way whatsoever. So the market liked the commentary as well. Hear out the management.
We did revise our guidance in the earnings call last evening, right? So given the strong momentum that we are seeing, we think we will do a constant currency growth of 21% or more. The first half has been very strong for us, and we continue to see that momentum into the second half as well. The slight uptick in the margins that you're seeing is essentially coming from strong operations and use of technology to transform client operations. We are constantly on the lookout, but subject to valuations that meet our criteria, we'd be happy to do an M&A. We operate like a true global company, right? So most of our employees in every geography that we operate are local citizens, and that's true of the US as well. Over 99% of our employees in the US are either citizens or green card holders. So we don't rely on visas, and it's, like I said, less than 1%. So none of these regulations have any direct impact on us.
Well, moving on to Dr. Reddy's, that's been the big laggard today. This is after the Canadian regulator issued a non-compliance notice for semaglutide injection. That got delayed. Ekta is now joining in with the details. Ekta.
Well, yes, definitely a setback for Dr. Reddy's because they've received the notice of non-compliance from the Canadian drug regulator for their version of semaglutide or Ozempic generic, which is basically the blockbuster weight loss drug by Novo Nordisk. Now, what they have said is that the non-compliance issue or notice is seeking for additional information and clarification on specific aspects of the submission. Now, just to put it into perspective, the semaglutide market is going to see a patent expiry in Jan 2026 in Canada. So that's where you're going to see competition come in. When it comes to competition, at least, the management themselves have said that they expect the Canadian market to be quite competitive, but they are confident that the semaglutide opportunity will be something that they'll take, advantage of in over 80 countries, either via partners or directly in the next 12 to 15 odd months. And they do have a volume of around 12 million pens that if in case it doesn't get absorbed by Canada, it will be absorbed by other countries. And other countries where they do see an opportunity besides Canada will be India, Brazil and Turkey. So they had sort of laid the ground a little bit in their Q2 numbers just a couple of days ago, indicating all of these factors to investors. Now, what do analysts and brokerages say? That they expect around 5 other filers for semaglutide in Canada. They will be watching for other companies getting approval and the timeline, because that permutation and combination will result in how much Dr. Reddy's makes, because it depends on when they get approval, and when they get approval, how many competitors are already in the market. So the street is anticipating that they could probably see a delay of around 5 to 12 months in terms of a launch. FY27 still building in around $100 million from the opportunity from the analyst community. So let's see whether that comes through or not. Nomura has a buy, but they've cut the target price. Morgan Stanley has an equal weight. Citi has a sell on this particular counter.
Thank you very much for that, Deven. Dr. Reddy's, under your coverage. And the other impacted stock is, I think, Shelley Engineering, right? Which makes pens for the injectable form.
So I guess I think the Dr. Reddy certainly requires to produce some amount of growth engine. Otherwise, I think the valuation wise, the company remains pretty decent at current levels. Maybe the downside risk may be protected as far as I think the earnings are concerned, because maybe I think the earnings are showing slight growth, if not more, in this kind of a situation. Unless we see some major growth drivers coming in, I think the upside in the stock price probably might see a little capped at this point of time. Though this Canadian observation, I think, has definitely come in the way. But I believe that I think anything which is available somewhere around 1,000, 1,100 kind of a price in that range could make the stock a little bit more attractive from investment perspective.
Yeah, no, absolutely. So that's the view on Dr. Reddy's, and of course, the pharma space on the back of what's happening. Shelley, of course, has been a huge wealth creator, it's just had a one-way kind of move. Last year was the big one for Shelley. So close in 2023 was about 340 rupees. From 340. It closed last year at 1,440 odd rupees or so, and from 1,440 this year, it's moved up to 2,300. So it's like a it's catapulted to another sort of league. But of course, today's pullback, is while meaningful, is a small dent in what has been an extremely profitable share to be in that sense. 160 odd points lower is what you have so far on the index at this stage. Devin, just financials, if you want to come in, and not what you already own, not the ICICI banks or the HDFCs, etc., but are you widening what you're looking at? For example, 5-star reported numbers recently. The call went pretty good yesterday. Credit Access, of course, reported numbers. Again, Credit Access has done very well from the lows of 750 to where it is now. 5-star still available at a much more decent kind of valuation. Different business models. One is MFI. The other, of course, is fund small businesses, not MFI loans. Any thoughts, Devin?
Yeah, Prashant, I think importantly, we are looking at those companies which are having the larger AUM and a very strong consumer finance franchises. That may include the likes of Bajaj Finance, or that may include also the likes of Jio Credit now, wherein I think the couple of advantage on one side, I think a very strong AUM book, and at the same time, their ability to execute it efficiently and faster, I think is something which is appealing us. And maybe I think we are looking at employment of AI at the front end in their fintech is possibly one of the reasons for which they are growing faster compared to the industry players in the marketplace. And we like that kind of a proposition. So yes, you are right. I think the other big companies which are probably growing in a single digit in this particular quarter, as we have seen, vis-a-vis that, I think these companies, the NBFCs, the stronger NBFC companies, are growing at, I think, in 20% plus kind of a growth. So we will probably, I think, look at such companies which have the ability to execute faster by taking care of the liability side of the balance sheet well. Maybe I think that's where probably one should be focusing on in this kind of a crowded market. We are typically not looking at small finance, microfinance kind of proposition, largely because of the other barriers attached to it. But I think some of the larger companies, yes, we are more comfortable.
Okay, the other story where there is, the stock's done a flip-flop is, of course, the entire telecom area, right? And Voda Idea is one which people, I think, it's traded quite heavily. But there is also Indus, etc., etc., etc. So yesterday, the written order from the court came through, and it basically said that maybe the relief is limited. We don't know; it's not clear yet. Probably the government is going to seek that clarification in terms of what the court is okay in allowing. But it's to send the stock the other way. Now, we spoke with Balaji Srinivasan of IIFL on exactly this, so I just want to play that out for you.
If you look at the order that the Supreme Court uploaded last evening, I think it's a little ambiguous, to be honest. Since the order itself leaves a lot of room for interpretation, I would expect the government to, probably seek additional clarification from the Supreme Court before they take any concrete action. So I think based on what transpired a couple of days back, the expectation was that the government would have had a free hand, and there could be relief to Vodafone Idea either in the terms of either in NPV terms or in terms of the payment timeline. Now I think all that probably needs more clarity to come. So to that extent, I think any release rally or any expectation of a clarity emerging would probably now take a back seat, and we have to see how the government proceeds going ahead.
Well, that's Vodafone Idea, and the stock has taken a big knock today. Devin, Cipla is the other stock which is in focus. So after 10 years, Umang Vohra has said that he will step down effective March 2026, and Achin Gupta, who's currently the global COO, will take over as the MD and the global CEO. Generally, whenever there is any sort of a transition, there is volatility in the stock price, there is a period of stability. How would you approach Cipla on this? I mean, do you have any thoughts? Have you interacted with Achin Gupta before?
So I think to his credit, Umang has played a really crucial role in navigating Cipla over the last as many years since he has been at the helm of affairs, and indeed steadily brought this company up to a greater level. a promoter-driven company to a professionally run managed company, I think is something which he has transitioned it very well. Not completely sure about, I think, the incumbent who is basically going to be taking care of the assignment now onwards. So would different from that particular comment. But overall, Cipla portfolio of products, I think they remain quite appealing. And they are actually, I think, moving quite systematically in the complex generics and the specialty generics products. So that's where probably we like this company from the launch point of view, as well as, I think, the visibility of earnings point of view.
By the way, I'm looking at some of the losers today in the mid-cap market. So there are a bunch of banks. For instance, IDBI Bank is down. Then we've discussed Vodafone and Indus, so those stocks are under pressure. There's also United Breweries because of a weak second quarter. That stock's been down about 3%. And then, of course, Lee Travenues Tech, the company that runs Ixigo, still down 15%, despite that clarification that this was a one-off ESOP cost issue, which dragged down the bottom line. They've reported losses this quarter. Market's not too happy with that in any case. On the Alcob space, Devin, any thoughts here? I mean, there is United Breweries, weak quarter, this extended monsoon, which kind of played its part. Radico obviously had a good quarter. They reported numbers yesterday. We spoke with the management this morning. They sound as bullish as ever on their premium segment. Any thought? Varun Beverages, since I'm talking Alcobev, Varun is not an Alcobev company, but they're getting into beer in Africa. And the stock took off in a big way yesterday. Anything that you're recommending buying here?
So not directly the alcohol part of the business, but I think Varun Beverages, I think, which is basically now foraying into this particular segment, is looking a little bit more interesting. Though everything is in price, according to me, I think the valuations are completely justified for the growth that they have undertaken. But this company has shown a distinct character of producing higher amount of growth with the profitability, including in the international market in which they have moved, those three markets in which they have moved. They have actually, I think, shown resilient and, I think, distinctly good performance. They promises to do better from current levels, including, I think, the India market as well as, I think, the overseas market. I think the portfolio of products that they have basically been putting across, they are actually showing better promises as we see it. But as I said, valuation-wise, they're adequately priced today. So maybe unless meaningful price correction, I think one will not immediately jump into them. And that's what my viewpoint would be.
By the way, Hyundai is reacting positively to the numbers. The revenue growth is modest, 1.2%, but EBITDA has jumped up 10%. There is margin expansion of about 100 basis points, and the profit has soared close to about 14%. And with that, the stock has moved up to nearly 2,400. It had a very slow start last year when it listed, didn't move too much from the issue price of 1960. But since then, it's managed a pretty decent return of nearly about 20-odd%.
Yeah, absolutely. Hyundai is reacting well. The other set of numbers, when the banks, Canada particularly, still holding on to a gain of about 3%. It's been a good quarter for them. Growth has been very, very strong. They have done 14% loan growth in Q2. And the deposit growth is also in double digits, 13%. These are year-on-year numbers. And the margin compression only, 5 basis points. So very steady asset quality. So all round looking good in the second quarter for Canara Bank as well. And therefore, the stock is up about 3%. Well, on that note, we will head into a break. But before we do that, it is time to highlight our Super Pro chart of the day, powered by Money Control. Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here's today's chart and what it means for your next market move. BHL is a stock on your screen and it's showing a cup and handle pattern and a bullish breakout. As you can see, cup and handle pattern, bullish continuation setup where the price forms a rounded base and a small consolidation, which is the handle. A breakout above the handle and the handle resistance signals upward momentum, and that handle breakout for BHEL has happened today. If you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day will be winning 1 gram of gold. So don't wait, scan, subscribe, and make your portfolio shine brighter with Money Control Super Pro.
Welcome back. I think we've got a little bit of a pullback, 180 odd points. So, just under 25,900 now on the Nifty. IEX, I mean, if you were expecting that perhaps there would be some relief, that's not to be the case. Stocks down about 3%. Ashmit is here to tell us what happened at the hearing today. Ashmit, take it away.
Well, its hearing was due to be taken up by the APTEL, that's the appellate tribunal, as far as electricity matters are concerned. Now, what's important is that IEX, along with other power exchanges, was expected to be pushing for an interim stay of a CERC order. The order that they are up against is the CERC July 2025 order, which is essentially directed for a staggered implementation of market coupling of leading electricity exchanges. Now, this is something that power exchanges, especially the likes of IEX, are dead set against. What they're essentially arguing is that this coupling strategy, this coupling approach has been done by the CERC suo moto. There has been no hearing done. There has been no consultation done with the industry, also calling it arbitrary, saying that it goes against established protocols, regulatory protocols which have evolved over the last 15, 20 years for the sector. All of that has been thrown to the wind, and that this will completely wreak havoc with respect to the market share that different exchanges have in terms of different products and services which they're offering. What's important is that today was the date where they would have likely pushed for an interim stay. Unfortunately for them, what we understand is that one of the members who's hearing this case has chosen to recuse himself from hearing this matter, essentially saying that that person is not keen on hearing this matter, which essentially means yet another deferral. So, suffering a delay, the IEX petition in APTEL against the CERC order, now we understand this case is likely to be heard once again by a fresh bench of the APTEL, but that has been pushed down the road. That's likely to happen somewhere in the second half of November. Now, November 28th is a date that the lawyers for different parties were pitching to APTEL. So clearly, this interim relief that IEX has been seeking, now pushed further down the road. November 28th is perhaps when we can try to get more clarity from APTEL on whether or not there is this stay on this coupling approach, on this coupling directive by the CERC, or if this CERC directive is to be followed and the exchanges would need to follow through. Back to you.
Okay, all right. So another delay, basically, for now. But a good sort of context background to the case itself. Ashmit, thank you very much for that. Varun Goyal from Mirae Asset Investment Managers is with us with what he's making of things and what he's doing, more importantly. Varun, give us a sense of how you've been active in markets, doing what, buying what, selling what. Just give us a flavor.
Good afternoon, Prashant. Thank you so much for having me on the show. I think we have been, it's more of the same. I think broadly the earnings that we have seen in Q2 so far have been in line with expectations. We're looking at 8 to 10% kind of growth in large cap universe. The more important trend, I think we will see a change, or we expect to see a change in small cap earnings after, I think, 4 quarters of degrowth. I think this should be the first quarter where we should start seeing earnings coming back in the small cap space driven by small cap financial space. And so far, I think the trend seems to be on track. So we are selectively looking at some of that space. We are looking at some new IPOs coming, a lot of interesting companies coming up for listing this year. So rest of the portfolio continues to be stable and more of what it was earlier.
We'll just come to what you like in the IPO markets and the companies that are getting listed. But very recently, towards the end of August, Mirae launched a gold-silver passive fund of fund. After a frenzied run in precious metal, it appears that things are now, consolidating, maybe pausing, maybe it'll retrace a bit. At a fund house level, what is the call that you'll have on gold and silver, say for the next 12 to 18 months?
I think we always believe that asset allocation is important, and every investor should look at having some allocation to precious metals. But having said that, I'm no commodity expert. I would request you to reach out to the relevant person in our team for a more detailed view on gold and silver.
Back to the point about IPOs, you said that some interesting IPOs are on the anvil. Which ones have you all participated in as anchor investors? And now there are 3 of them. Orkla is currently open. Tomorrow, Lenskart. And next week, we've got Grow. Do you have a comment? I mean, are any of these 3 the ones which you find interesting?
I think definitely the GST cuts and the tax cuts that we saw should give a big boost to discretionary consumption. We've been looking at this space very, very closely. I think the biggest beneficiaries, at least early on, seems to be the white goods, consumer durable space, and of course the automobile space, especially the pass car segment. So I think definitely, companies rated in those areas should definitely benefit, and we expect a strong demand, a rebound in these categories in the next, let's say, 6 to 12 months. So these are categories which are of interest. I think overall, if you look at the consumption space, I think the staple companies are seeing disruption in business models thanks to the advent of quick commerce. And there are several categories which are coming up where the distribution mode is no longer that relevant. So those companies which are able to reach out to the customers without the distribution presence are denting the growth of the entrenched players everywhere. So without getting into specific names, I think there are a lot of interesting consumer names, especially on the discretionary side, which are available or which will get listed over the next 6 to 12 months. And we are looking at some of them.
Okay, so consumer and consumption is an aspect you're looking at. Varun, hi, great to have you on the show today. Speaking of Mirai's funds, I believe you guys got the approval to launch an infrastructure fund as well. And I don't think this is a ETF. This is going to be a actively managed scheme. Not sure if you're part of the team that will be managing this fund. But I mean, in general, tell us what's the sense on infra? Looking at the excitement that BHEL's numbers, L&T's commentary and L&T's performance have led to, I think the market's very well aware that, even if you move towards consumer and consumption, you can't entirely ignore capex and infra. So what is the thought process here? What all would you sort of, classify as infra in terms of fresh purchases now?
Yeah, good afternoon, Surbi. So I think that's a great question because I think the whole market is currently focused on consumption. And of course, there have been big triggers in terms of various tax cuts. But our sense is the pillars of growth will remain both capex and consumption. And if you look at the last 5 months data on central government's capex, the growth has been very strong. And that, of course, comes on a very low base. But we believe that 11 lakh crore capex target will be met for this year. And as such, we remain quite constructive on capex as a theme. And I think various segments like power, T&D, solar, wind, and ancillary companies in that space. I think two-wheeler and the whole auto segment is set for a transition from ICE to EV. So there is going to be a massive change in the overall infrastructure story in India. Ports, roads, railways, and there is a massive capex story. Of course, we are coming up with the infrastructure fund. Our colleague, Bharti, would be looking at that. So maybe she can talk about it in a lot more detail. But from my point of view, definitely infrastructure remains a big part of the funds that I manage, and hopefully that segment should deliver a strong earnings growth. I think after 12 to 18 months kind of a pause, we believe the earnings will get pretty strong. And from whatever we have seen this quarter, I think most construction infrastructure companies look set for good couple of years going down the line.
Varun, we leave it there. Thank you very much for joining us. Quick conversation, but useful. Appreciated very much here on CNBC. Well, 187 points on the Nifty, so it's a down day. And we are now in the last hour mark. We'll take a break. We are going to come back with some insights, some dealing rooms, D-Street chatter with Nimesh coming up, and some short-term trading ideas as well with our technical experts. Stay tuned.
Let's go across to the Cipla investor call, where the management is discussing, of course, the Q2 numbers, but more importantly, Mr. Umang Vohra's decision to move on from the company.
Thank you for your patience and understanding. Over to you, Lynn.
Thanks, Trina. First up, we have Ekta Batra from CNBC-TV18. Over to you, Ekta.
I'm not sure I can hear her. I don't know if about the others.
You're still muted.
Okay.
We'll just give her a second, else we'll move on to the next person. Okay, I think she's on.
I think we can pick the next question.
Yeah. Hi, Umang, can you hear me?
Yes, I can. Yeah.
Okay, great. Thanks very much for joining in and speaking with CNBC TV18. Umang, I just wanted to start by asking you about the reason for this particular transition after 10 long years at Cipla, and what might be the position that you're looking for post.
I can't answer what I'm looking for, but I think I was brought in at a time in Cipla's journey where we had to create Cipla for the sustainable future. That included repositioning our India business. That would included establishing a business in the US. And doing that with passion at the center of the heart, and always, running with the theme of caring for life. And I believe where Cipla is today, 11 years later, I think it's reached a stage where it's ready for the future, and it's a solid organization that can continue to grow sustainably. And we've developed a very good talent pipeline that can help take the company forward. So I just think that from my perspective, what the task I had set out to do through my 2 terms is achieved, and Cipla is now in good hands of the rest of the management team and Achin to take this forward.
So I assume you're not retiring from the pharmaceutical space.
Well, not really. I'm not going to retire, but my own view on that is that we probably should not retire till we're 65, 70, or whatever the age that we can work till. So I'm not retiring as yet. No.
Just about Cipla now, there was this sort of stability when you came in for the past 10 years that even if the promoters are not actively involved, there is Umang to sort of steer the ship. There seems to be now a vacuum amongst a couple of analysts and investors that I've spoken to. What is your sense in terms of what the future for Cipla would look like, and would a possible stake sale now be back on the table?
No, my own view is that, and I say this always, Ekta, and with humility, that Cipla is today an organization that is completely professionalized. And I think the promoters, and my due credit to them, they have enabled this. And the organization today is truly run by professionals. The promoter insight and guidance is always there. The board takes a very active role. I don't think there is a vacuum. I think Cipla has enough talent to continue to guide it. And there have been people in Cipla who've worked, who are lifers in Cipla and continue to be there. And I think it's, I don't think there's a vacuum, and I think the stability will be there, right? Every 11 or 12 years, management teams change. And I think the change sometimes is for the good in order to take the company to the next level. So I think we're going through that change here. Yeah.
Sure. But just before I hand it over to the next person to ask the question, just wanted to understand the tie-up that you have, announced with Eli Lilly for Mounjaro, which is obviously going to be branded differently. But is there a revenue share? If you could just spend more time giving us more details in terms of the revenue share, whether it's exclusive, and what does this do to, say, a semaglutide launch for Cipla? Would that be still on the cards, considering that you are selling a competitive product in the market?
So maybe I'll add, there's not too much that we can speak about in the agreement, Ekta. We're very, we have a confidential agreement with a very strategic and long-term partner with Eli Lilly. We practically sell most of Eli Lilly's range today in India. But what I can share with you is that this is a trusted partnership, right, between Lilly and Cipla to service the India market. There is obviously, you're aware that Eli Lilly's brand is already selling, and Cipla will supplement that. I think the other thing that I can say is that, you can expect margin structures to be very similar in the past transactions that we have done with Lilly. And we can't exactly divulge what the margins, etc. are. We believe that tirzepatide is a product with superior science and has the ability to firstly create the type of outcomes that people want. We kind of see it's superior to semaglutide as well. And on sema, depending on how our product gets approved and how soon we are ready to launch, at some point in time, we'll have more clarity on that as well.
Okay. You also have a $1 billion guidance for the US. Does that still stay?
Directionally, yes, it should. Obviously, when we gave that guidance, we said we would have launches which would come in to substitute what we would potentially lose with Revlimid. And I think directionally that guidance stays even today. This year we may not be at $1 billion, right? But at the same time, we're not going to be so off the $1 billion either.
Okay, all right. I'll join back. Thanks very much, Umang.
Thank you, Ekta. Next up, we have Vishwanath Pilla from Money Control, promoting you to a panelist.
Well, that is Umang Vora of Cipla saying he's completed his 2 terms. There is no leadership vacuum. The company is now completely professional. The stock, though, is still down close to about 2.5%. That uncertainty, whenever there is a leadership transition takes place, is always there. But for now, Nimesh is now standing by with D Street Chatter. Nimesh, a bit of a sluggish session, and the Nifty is still well below 25,900.
Absolutely. And in fact, Rima, today I think it's a down day for the pharma. We heard the Cipla management, but even Dr. Reddy's is down. So in general, pharma is in a bit of profit booking or a bit under pressure, and is the metal pack as well. I guess there it's more of profit booking, so to speak. But again, last couple of days clearly indicates that at the higher level, you're seeing a bit of supply, and there is a technical resistance as well around 26,200 on the Nifty. So that's clearly playing out in the last couple of days. But there is no panic as such. I'm not hearing very large selling from the larger FIs as well. And that's showing up in the data for the last couple of days. Yes, the net short has gone up, but even on the cash side, there is not big selling. And again, that explains that, maybe in the last couple of days, at least the broader market seems to be not panicking much. In fact, they're outperforming at the margin compared to the large cap stock. So clearly that's playing out from a broader market perspective. I guess for the level to break about 26,200, some big news has to come. Either a big India-US deal or some big results coming up in terms of favor of the bull. So that clearly is a thing to watch out. But again, from a flow perspective, mild selling is what I understand from FIs again in today's market.
Okay. Nimesh, now to the stock chatter. What are you picking up?
Well, so the first stock on my list is delivery. The results are today, so watch out for the numbers. But beyond that, I guess in the next couple of days, you might see a large block as well on delivery. One of the strategic investor could potentially sell 2% stakes. That's the indication as far as delivery is concerned. The second stock is Suzlon. That's been buzzing for the last couple of days. There was an announcement of a new CFO as well joining from December. But apart from earnings, there is a strong indication that maybe the company is likely to back some large orders as well. So that's a trigger there. The third name is L&T. Strong delivery-based buying is what I understand. Some large FI seems to be active buyers as well. And in the morning, there is a Morgan Stanley tactical buy as well. They are the most bullish on the street with a target price of almost 5,000 on the stock. So there is a bit of buying for sure in L&T in today's market. And the last one is Associated Alcohols. I haven't tracked the stock much, but it came into that volume charter as well. A big move in that stock, up 16%. And I understand today one influential HN investor has bought nearly 1 lakh shares. So maybe that explains a big move in Associated Alcohols in today's market.
That's an interesting one. Associated Alcohols, 16% higher. So, some 2,300 crores in market capitalization. So in terms of listed names in that space, this perhaps would be the smallest one in that sense. So I think a lot of their business, I guess, is bulk alcohol as well, and I think they are into some Indian-made foreign liquor as well. So that's the one to track. Mitesh is with us with what he'd want you to do for short-term trading ideas. Mitesh, what do you have?
While India is a BTS trade, good price and volume action today, closing near the day's high. Keep a stop at about 431 and a target of 440, 442 for tomorrow can be looked at. And the other one is NBCC, which is also BTS with a stop at 117.25 for targets of 120 half or so.
Okay, all right. We'll take a quick commercial break here. Mitesh, thank you very much for that. We're going to come back in just a bit from now. And we will sort of address two names. One is FedFina, which is a Fed Bank Financial. So, there's a story there. And PB Fintech is jumping on the back of earnings. Take that break. Back with both in a bit.
Okay, so that is the market as we are coming to the final leg, 170 points lower. That's what the Nifty is doing at this point in time. The selling actually has been contained to the large cap space. If you look at it, I mean, overall, the mid cap index, it is still managing a bit of a flattish stance as we're getting towards the close. Before we get to Amrish and find out more about his stock picks, let's quickly bring in Yash. Yash is tracking a source-based development. A clean-out trade from True North Fund is likely in Fed Bank Financial Services. Let's go across to Yash. Yash, what exactly are you picking up?
Well, True North holds about 8.6% stake when it comes to Federal Bank Financial Services. And what we've been given to understand from our sources is that True North has appointed bankers to drive a clean-out trade when it comes to this entire 8.6% stake in FedFin or Federal Bank Financial Services. Now, what we've been given to understand is that the bankers have started working on this particular transaction, and this transaction is expected to happen through a block deal where this entire 8.6% stake in Federal Financial Services is expected to be sold. This is at an advanced stage of being executed, and very soon we expect to hear something on this particular stake sale coming from True North, a clean-out stake sale in FedFin or Federal Financial Services.
Okay, PB Fintech, Yash, what stood out? Why is the market excited?
Well, the numbers continuously for the last few quarters have been strong, and that continues to be the case in the second quarter of FY26 as well. As far as the premium, which Policybazaar generates for all the insurance companies, that grew at about 40% in the quarter. The revenue which it generates for itself from that premium generated for insurance companies, that again grew at 38%. The new initiatives, that saw a strong growth of 61%. Core online business not far behind at about 26% growth there as well. The credit business still remains subdued, but the insurance business is doing pretty well. Contribution income, that also came in at about 464 crore versus 319 crore. The margin, contribution margins, that saw an increase of 200 basis points. Adjusted EBITDA at 156 crore versus 56 crore, and adjusted EBITDA margin growing by about 500 basis points at 10% as compared to 5%. So overall, the numbers looked very, very strong. The stock hadn't done much in the last 1 month or the last 3 months, and all of that can be seen in the stock price today.
Okay, all right. Yash, thanks very much for that. Amrish Baliga is now joining in to take us through the last leg of today's trading action. Amrish, thank you for being with us. We'll come to all the earnings and all the excitement, including stocks like PB Fintech that are reacting well to those numbers. But first, you give us your pick.
My pick is REC, which is a Maharatna public sector enterprise under Ministry of Power. And they provide term finance and project funding for critical infrastructure. Focus is on power sector, but they also fund infra and logistics sector. Strong credit ratings due to which they've been able to raise funds decently cheap. And we should see huge growth in power sector over the next few years. We've already seen that in the last decade. Renewable space itself, we are talking of 500 gigawatts by 2030, and REC would be one of the key players in funding this growth. The balance sheet also is improving decently well in the current year, expecting the net NPAs to be closer to nil because expecting resolution of the 12 NPA projects this year. And we should also see some recoveries. I mean, though we saw a slower growth in second quarter, but then if you're talking of the next at least 8 to 10 quarters, expect a double-digit growth. So EPS expected for FY27 is about 75. And based on that, my target price is 500.
Amrish, late revenues tech or Ixigo, it's fallen below the price at which Prosus invested 10%. That's 280, stock now is 273. Does it look attractive?
In fact, I've not tracked this very closely, so it's a bit difficult for me to really comment at this point of time.
What about these refining companies? The Chennai Petro, 9% up. This week, it's up close to about 14%. MRPL is doing well. Lots of oil and gas, OMCs, all on the rise.
I mean, if you look at the Singapore GRMs, they have really shot up, and which actually means that for the current quarter, the GRMs for most of these refineries should be much higher than what we have seen in the previous quarter. At the same time, despite we bringing down the buying from Russia as far as the crude is concerned, I mean, we're not really seeing a huge jump in the oil prices. I mean, unless oil prices go beyond $70, $75, I don't think any of these like refining units will see a margin contraction. So from that point of view, I think we should see at least one or two more legs of upside for these refining companies.
Okay. All right, Amrish. We'll just recap today's trading action, then we'll get more with you in Markets Forward in just a bit. The market is going to end down on the large cap screen level. But if you look at the mid cap space and you look at some of the earnings reactions, you know that the market is alive and kicking. It's thriving. There's no two ways about that. Aditya Birla Capital that reported numbers 5% up, BHEL, PB Fintech, Sagility. We've been highlighting these stocks right from the morning. There's NetWeb that has found more traction. NetWeb is up another 4.5% today. MTAR Tech is up 5% on circuit. So even though the mid-cap index is probably going to end flat, beneath the surface, there's plenty of action. And stocks where there's good news or good earnings, they are being rewarded quite handsomely. But yeah, large cap screen, no taking away from that. There's some softness there.
Absolutely. And, maybe just a quick look at the broader market where there is perhaps more down than up, but actually I think we should start with what was up because volumes are all on what was up. Sagility, big one, 8% gains. 5-star with about a 5% gain, 20% last few days. BHEL was up 7%, so it's a big gainer. NetWeb, I think we just mentioned. Policy Bazaar, Yash highlighted 7%, so 1850 or so. We were talking about Chennai Petro, of course, which does well. AB Capital 5, Vaibhav Global 6, all results, by the way. Credit Access results, MTAR Tech 5%. I'm not sure if MTAR is reported yet, but 2466 has had a phenomenal run. Last 1,000 rupees has come in the last, a month and a half or so. Newland Laboratories about 5% today. And Wimta, Grindwell, Shanti Gold is, I can go down the list, but the volume started to thin out a little bit here. But pretty good session, all told. No real problems.
Absolutely. On the large cap screen, we haven't spoken large caps at all, so just rounding it off. Where did the cut come in? Pharma for sure. Dr. Reddy's and Cipla. Two headlines. Reddy's having issues with the semaglutide launch in Canada. And Cipla numbers plus this management transition that's going to play out that weighed on the stock. And a couple of other big heavyweights like Infosys and Reliance and even HDFC Bank to that extent were all down. But the day belonged to the big boys in the infrastructure and capital goods arena, L&T, BHEL. These are the stocks that were shining bright today.
Okay, well, it's a wrap on this edition of Closing Bell. From all of us here, it's goodbye. Thanks very much for watching. Markets Forward pick coming up in just a bit. Amrish, of course, will join you on that in just a bit.